Welcome to It's the Economy. As the third quarter results season ends, one unhappy conclusion is that the sales of FMCG companies have been a disappointment. Hindustan Unilever, Dabur, Patanjali, ITC, Emami have all reported flat or low single-digit volume growth. Value has been a little better because of price increases. However, NielsenIQ, the market research company, said in a recent report that overall sales volume grew by 7.1% in Q3, while sales by value grew by over 10%. So there is a dichotomy here. In sharp contrast to all this, the IIP numbers that came yesterday said that consumer non-durables, which means FMCG, their output contracted by 7.6% in December. So given all this confusion and to get a 360-degree perspective, all the nuances of India's consumption, I have with me Roosevelt Dsouza, the head Consumer Success-FMCG at NielsenIQ, Jayen Mehta, the managing director of Gujarat Co-operative Milk Marketing Federation, and hopefully another guest will join us. But first, Roosevelt and Mr. Mehta, thank you very much indeed for your time. Roosevelt, how do you explain this so-called dichotomy? When the individual results came, HUL said flat, Patanjali said flat, which means zero volume growth. While some of them, of course, Emami and all have given 5%, but your numbers look much better. Who's growing?
Firstly, good morning, Latha. Thank you for having me back on the show. I don't see this as a dichotomy. If we look at for the first time this quarter, the growth in value is actually coming because of price growths. The first time we're seeing price growths, the last time we saw this was, I think, June quarter 23. And after that, there has been a suppression of price in the market, which are not really being passed on to the consumer. We're seeing that happen in quarter of July, August, September, coming up at about 1.5% price growth. This time we've seen 3.5%. So if you look at the volume growth at 7%, along with the price growth, if you add that, that's when you get a value growth in double digit. So to me, if you actually remove the price growth, the volume growth is marginally higher.
Yeah, but it is still higher than almost all the individual FMCG companies whom we cover as listed stocks. So that's the dichotomy I want to understand. Is it that, smaller companies have grown well, unlisted companies have grown well?
Exactly to my point. I think if we look at always the large companies, and we do agree, we call them giants in our own internal parlance, and that is like they're going between 1 to 4%. These are companies which are over 5,000 crore turnovers. It is where we're actually seeing double-digit growth are the small and what we would actually call the regional players who are more focused on a couple of states here and there. And that's where we are seeing a huge influx of growth coming from them, which is actually pushing up the overall growth. So we are also in line with what the large giants growths are getting reported. But if you look at the overall industry, that's where we actually see the small players having a big impact.
Okay, that chart is just coming up. Yeah, there you go. Consumption growth by volume for small companies. If you can have that chart up again, that's grown much better than what we call giants. That's important. Mr. Mehta, you all cover the entire category. You all sell to a lot of small people, but you are a giant in yourself. How has the sales experience been in Q3? In volume and value separately?
Yeah, Q3 was very good. We had almost 15% growth, almost the same in quantity as well as value, because we didn't take any price hike except for a small increase in milk, which was earlier in the year. So it's been a good quarter, as we had discussed earlier also on the same channel. And the next quarter, which is the current quarter, also has been doing good with almost 22% growth recorded in January and almost the same numbers we are looking at February and March. So
22% year-on-year growth in dairy products.
Yes, that's been our best ever growth and the best ever turnover over the last 50 years of GCMML.
Okay. I think the Amul numbers will come up in just a bit, but that is massive. Roosevelt, what are we seeing over here? I mean, here is, an unlisted giant telling us that their volume has grown by, 15% in Q3, and in January by 22%. That's a massive growth. Is it that the listed companies are getting something wrong? And, there are others that urban consumption is not a problem, but specific companies are not getting it right.
I'm qualified to really differentiate between listed and unlisted companies. When we represent the entire FMCG industry. Okay. And so I'm not really surprised when I see results from Amul. See, what is happening is that the regional players with regional focus, they're actually really going deep into, more in terms of distribution, in terms of coverage within the region before they get into, let's say, even into at a national level. And that's where you're seeing the growth pockets really, coming up, and probably that the penetration of distribution is what is helping them grow. So if you look at it from a very macro perspective, it looks like, okay, it's a 10% growth, but actually when you start unpeeling the onion, that's when you'll start seeing where actually the growth is coming in. And earlier you showed that chart, 9.5% kind of volume and value growth coming from the small and mid-sized players.
Mm. Yeah, so what we are seeing is Amul is growing by 15%. A number of the small companies that you pointed out are growing close to 10%. I think the small company number was 9%. I'm only talking volume now. The giants are reporting, flat zero or maybe less than 5% growth, 4.4% as they put it. Mr. Mehta, what's your sense? Is this poor penetration? What's going wrong here?
I can comment on what others are doing, but as Mr. Roosevelt mentioned, yes, we have to focus on the basics. It is basically the width of distribution that you have, the depth of penetration of the products that you have in the market, work on every single category you operate in. Also, not lose sight on what's going to happen for tomorrow and prepare for the tomorrow's customers. And all these things you do together and be omni-channel. I think that's the way forward, because the Q-commerce, e-commerce, the modern format stores, our own Amul parlors, and the 20,000 distributors that we have covering more than 1 million outlets on our direct basis is actually driving growth here. And we expect a much better growth also in the period to come, because we are entering the main marriage season. Summer, early summer is also there, and Ramzan and other festivals are also coming.
Okay. Yeah, of course. Amul Chas, I guess, will be very important once summer starts. But Mr. Mehta, the bigger problem that Amul may face will be if the US insists that we bring down tariffs, or they will impose competitive tariffs, reciprocal tariffs. Now, I checked up the tariffs on milk and dairy products is 30%, in fact 30 to 40 if you go to sweetened yogurt, etc. How do you think this will impact Amul in case we have to bring down tariffs to whatever, 10% or something?
We already have a TRQ in place as far as the dairy products or skim milk powder is concerned. So while the duty on skim milk powder in India is 60%, if you import the 15,000 tons under TRQ, you'll get at 10% or so. So we don't have a challenge on that front. Plus, US is not US is not looking at India as one market for exports of their milk powders. In fact, it's on the other way. We are also a local player in the United States now, and Amul is perhaps the only brand of milk which is available coast to coast in US. So we'll play both sides of the game.
Oh, yes. We were told about this in the course when we were discussing tariffs. But if your import of skimmed milk or dairy products is brought down to, say, 10% from the current 30%, you don't expect Amul will have to drop prices here in India? You think you will still be profitable?
We would not encourage any imports, and dairy is one category which has been kept out of every single free trade agreement.
So, no, I agree with you, sir. I agree with you. The government has been extremely correct in protecting, vulnerable segments and important segments in India. But at the moment, we are faced with a different kind of geopolitics. If, there is a gun to your head, and if the tariffs do come down to 10%, is there a genuine import threat, or will you all still be competitive?
We have to be competitive on a long-term basis and not short-term basis. So it is better that the government doesn't take these steps, and we are sure that these discussions don't happen just in a jiffy. There is a long negotiation process, and it's not just for US, it's for every single country of the world. And these tariff cuts are not bilateral in any case. So we are not too much worried about it, because 8 crore families depend on milk for livelihood, and the government is prudent enough to see that we don't put their livelihood at stake just for such trade deals.
I do not for a moment doubt the government's intent. This will be the last thing they will want to sacrifice in the entire bargaining list. But I'm just asking you arithmetically, if the tariffs had come down, will Amul product still be more competitive? Will it still be, sellable?
Obviously, they will sell, because if there is milk, you have to sell. But it's not just US. There are many other countries who want to dump their surpluses into India.
Okay.
And
So if it is a 10% tariff, there is genuine danger, is what you're saying?
Yes, absolutely. Except for once you cross the TRQ level of 10,000 tons, obviously it will be a case of worry. Because at 10,000 tons, you still get at 15% duty, you can import.
Okay. All right. So it is important that that threshold of 30% tariff is not brought down. I take your point on that. Right? I understood you right.
Ma'am, look at the other way. I mean, we export to US our butter, our ghee. There is a duty ranging from 30 to 60%. So it's not they give us a duty-free access to their markets and we charge them duty. In fact, US charges high duties on dairy products. Then
in reciprocal, we win over there. Okay, I get your point over that. Roosevelt, before I come to you, I think we've got Anjan Chatterjee finally, but it's only on the phone line. We are not able to connect to him on video. Anjan, good morning, and sorry, we are just not able to get your video right. There's a problem with the lines. What has been the experience at Speciality Restaurants in January itself? Has the consumption in volume terms improved over Q3? And how was Q3 in volume terms over a year ago?
Latha, as you know that you go out to mainland China's of the world and you go to all our favorite restaurants. So OND, that's October, November, December, is the best season for, by and large, every food and beverage company. So it was the best, as per the comparisons. But we've definitely shown a growth of around 6%. And there is a humongous amount of tailwind at that point of time. Shadis, people going out.
What about January? Anjan, was January also 6% higher than a year ago?
Not really, because, as we talk about, once the tailwind goes away, you see comparisons of, economy being whatever it is, accepting the fact that the new tax regime which has come in, because we are at the upwardly mobile customer, wherein every penny counts for them. And there's been inflation in the economy, and there have been lots of challenges. Food prices have gone up. So there is a budget. They have a budget, but definitely over a period of time, I think Jan has not been as good as the JFM, that's January, February, March, would not be as good as the quarter which
October,
passed
November.
Quarter 3. So there will be challenges. It's become a bit of a food and beverage is becoming slowly a bargain economy, because if you see, unless you have a very strong brand, you will see people bargaining, asking for discounts, etc. But we are very hopeful, because our same-store growth has been very good, very steady, and we are very hopeful going forward.
Okay. Well, I'm taking a lot of hope from what Nielsen has put out in terms of data that small companies have reported both in volume and value very good numbers. Just a final quick question to you, Niels. Roosevelt, is there a premiumization trend or a consumer downtrading trend?
I think this is where we see some interesting observations. So while we've always been talking about premiumization, and premiumization also has been growing almost at 10.6% this quarter, but that's been like 8, 9, 10, and 10.6%. Interestingly, what we're seeing the mass brands or masstige is where for the first time this quarter it is doubled sequentially, and it's also at 10.6%. So what this basically tells us is that there is a segment that goes after premiumization, and that's going to remain. But we're also seeing the mass people who are going after mass brands. That's where it also ties in very strongly with the local player story.
Yes.
There is a price
Small and
play there.
mid-size.
There is a small pack play there. Okay, they're actually bringing so much out in the market, and there is a consumer for that as well, and that's why we see that growth also going up. So I think there's play at both ends of the spectrum.
Okay. Thank you very much, Roosevelt, Mr. Mehta, and Anjan. Anjan, very sorry for the very brief chat, but I think these are very positive takeaways. Amul telling us that this year, this quarter, they're going to see a 22% growth in sales, volume and value included, and they're not taken much price rise. And Nielsen telling us that small packs, unit items have done much better than the larger companies and the larger packs. That is an extremely positive story in terms of consumption at the bottom of the pyramid. On that note, we wrap up on Bazaar Chartbusters coming up.